Hello everyone, welcome to the channel of Tradeometry. Today is April 15, Wednesday. So today is the first time I made 2 videos in one day because I felt the need to tell you something very important information that you might not know. 90% of the average investors don't know about, and I believe this is a generational opportunity. And this is one of the opportunities that makes millionaires. First, I like to study charts. I like to study charts from history because history tells me a lot of things. History doesn't simply repeat, but it often rhymes. Look at the QQQ charts right here. So from yesterday and today, we're getting some solid volume coming in, and we get back to back a solid breakout pattern with solid volume. I think if you cannot confirm it yesterday and today is another confirmation. We broke all-time high by the close. This is very, very strong. And we're basically up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 up days in a row in the QQQ NASDAQ. This is unbelievable. This current rally happened only once in the last 20 years. It's this one right here. What could happen next may blow your mind. I think QQQ can easily squeeze another 10 to 15% from here. You heard me. From the all-time high right now, we can go another 10 to 15% all the way up. So if we do a measure from the bottom here, we already rallied 14% from the bottom at March 30th. I think we can go another 10 to 15% from here. This is going to be 10% is 710, and 15% would be around 750. Obviously not in this slope, in this extremely vertical slope. It could take longer. Like this rally could last for months. It doesn't have to go straight up. It can go up with a shallower slope, but it will continue to squeeze up, in my opinion. So now let's put that aside. Let's go back and look at history. What I found a very, very similar pattern in the history is right around here. October, November in 2023. We bottomed at October 26, 2023. And then look how many updates we have. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 updates. 1 pullback. 1 red day. And then another 1, 2, 3, 4, 5, 6, 7. Another 7 day in a row. So basically you have almost 3 weeks of updates with only 1 red days. 3 straight weeks or more than 3 weeks of ups with only 1 pullback. So this is quite amazing. And I know we're already at day 11, but this could extend to much further out. And if you look at this rally right here, from the bottom right here to the top right here, that's roughly 14%, which is roughly what we are right now. And even if we consolidate a little bit right here and a very small pullback, and then you can have another 5-6% up, and then slightly larger pullback, and then we go another 10%, 10-15. So right here is like 20%, 28%. The top is like 31%. then you get a more meaningful pullback right here. So this pullback is like a 7% pullback. So that was a more meaningful pullback, 8% pullback. But you have basically almost a 5 months rally with basically very minimal pullback. The only one pullback right here is like 4%, and that was it. And then you have one pullback right here, 2.8%, that was it. And you basically have a straight up from October 27th to March 8th. So you basically have over 4 months of rally, over 30% on the index level. This is NASDAQ QQQ. And on a lot of individual stocks, you're probably looking at an easy double up, or some of them may go triple. In this 4 months, it's absolutely incredible. You don't want to miss a run like this. This is where wealth were made. This is where how people turn into millionaires. You don't want to miss runs like this. Okay? This is one for the ages. I think right now we're looking at something very similar to this. We could have some absolutely amazing upside, right? We have close to 14-15% right now, and then we can have another 10 to 15%. If we repeat this rally, we go 30%, so that's another 15% left. I know this sounds crazy right now, but this is very doable, especially we have a precedent like this. What happened here? So basically, from late October to early November, this rally, nobody know what happened. And it's already up 10%. Just like what we're seeing right now, like pure short squeeze, breaking out every resistance with ease, just breathing through. It's absolutely incredible, and not necessarily with good like large volumes. Like this is like average volume at best, and you will have like days like this with very low volume and pullbacks of very low volume, and it just keep going up. And on this date, November 14th, something very, very interesting happened on November 14th. If you go back and look, the event happened on November 14th was the Bureau of Labor Statistics releasing October CPI inflation report before the market opened. The headline CPI rose 3.2% year over year versus expectation of 3.3%, down from 3.7% the prior month. Core CPI, excluding food and energy, came in at 4% year over year, also softer than forecast. This benign, cooler than expected inflation print triggered an immediate and sharp market rally. Stocks surged 2% in S&P and NASDAQ up 2.5%, Dow Jones up 1.4%. This was the big event that made market to believe that Fed is going to pivot. What do we have in the past week? Yesterday, right here, we have the PPI data. PPI was softer than expected. The core PPI month over month only came in at 0.1%, which is way lower than expected. And the CPI core inflation at 0.2% month over month, lower than expected 0.3%. So both core inflation, CPI, and core PPI both were lower than market expected. I think these two data points are the key factor driving the Fed decision to pivot in the next FOMC, which is very similar to what happened in November 2023. That CPI data came out and market is immediately pricing for Fed pivot. So I believe this is the trigger, which is adding on top of the current short squeeze. Market is jumping back in. And also you notice the volume from past 2 days are significantly higher than the previous week. The entire previous week, the volume was very, very low. But if you notice the past 2 days, the volume come back. I think this two data points, the core PPI and core CPI, softer than expected, are going to be the deciding factor for Fed to pivot. Even though the headline numbers are still running hot due to the energy price, but I do believe the energy price will eventually come down as we reach a peace deal with Iran. So like I said, history doesn't simply repeat, but it often rhymes. So now you want to buy stocks. What do you buy from here? You need to think about this. We are participating in a short squeeze. We're participating in this rally because we're expecting Fed to pivot. We're expecting Fed to cut rate multiple times before midterm. What are we betting on, right? Think about that. Which sector are you going to benefit the most? Number one is fintech. We all know this. When Fed cuts rate, fintech's gonna run, crypto's gonna run. This is the most obvious play. And the next sector is software, because software is the most heavily shorted sector right now because of the AI fear. Even though the fundamentals of the software companies are still solid, they're not getting any worse. And some of those companies are even getting better. They're raising guidance. Their profit margins expanding. They're growing faster. And still they're getting sold like they're going to bankrupt, which is crazy to me. Absolutely crazy. Those are the major categories I'm going to position in. Another factor which is also going to help the software sector is the private credit. The private credit issue is getting better. If you look at Blue Owl is getting large bids. Blue Owl is one of the major private credit players, and it has a lot of software exposures, obviously. As we see the relief rally from the private credit sector, I think the software is going to get a big short squeeze. So I picked a few targets in the software sector. Number one is IGV. If you don't know which company specific to play, then IGV is the one to buy because it covers most of the software, including Microsoft, including Palantir and Oracle and Salesforce, ServiceNow. All these companies are covered. And you see this massive candle, back-to-back gap up. So I bought the dip yesterday. There was a little bit of a scare yesterday after Anthropic is going to release some design software and also going to release a new version of Opus. And then you see this, there was a little bit of sell-off right here. So I bought the dip right around this area, and after the dump, and I doubled down because I know it's nonsense. Like they just keep doing the same story over and over again, but it's fundamentally there's really not much impact. This is the big one I bought, and I've been up a lot today. I bought the call options. I bought a lot of call options because I know the short squeeze is very likely to going to continue. And I'll show my P&L later. And then the other big one I bought was ServiceNow, which is up over 7% today. Massive rally. I also bought the dip yesterday. I I started my position right around here, and then I doubled down after the dip. And then this crazy rally, I think it's going to continue to squeeze much higher. And also I bought Oracle. I bought Oracle late after the dump right around here, and it's up nicely over 4%. These are the software companies I bought call options on, and I bought a lot of those. And my account was up quite a lot today. And today I even added more call options. I bought, after this small pullback right around here, I bought Coinbase. So this basically fits all my thesis and my key interest of sectors. And I was going to buy HOOD. The only reason I didn't buy HOOD is because I already have a lot of HOOD stocks. I didn't buy the HOOD options yesterday, and it was like already up 8-10%, and then another 10% today. I'm just going to let my stocks to ride this wave. Robinhood is actually my number one stock position as of right now, and it's been up massively. I'm very happy with my account. Very happy with the mix right now. So basically, ServiceNow is a SaaS play, and then Oracle is a SaaS plus Neo Cloud plus private credit relief, and then IGV is basically the combination of all the other ones like Microsoft and Palantir, Salesforce, and all the other companies that are extremely oversold. If you look at Microsoft here today, is almost up 5%, tremendous move. And I think Palantir also up almost 5%. All these software companies are going to squeeze much higher in my opinion. So if you don't know which software company to pick, I think IGV will be a very safe bet right here, because I believe the number one weighted component in IGV is Microsoft. And then we have I think the next on the list is Palantir, and then Salesforce, and then ServiceNow. So it already covered basically all the stocks that I bought today. I just, for some relatively positioning and position mix, I picked Oracle and ServiceNow, which I believe these two companies has one of the strongest fundamentals, and their business not going to be replaced by AI or Anthropic at all. I don't believe that ghost story at all. And I've been rewarded very nicely today. So that was basically my thesis, and my thesis is playing out exactly like I expected. And this is the most satisfying part of trading, is you have a thesis and you read the market and you look for confirmation of your thesis, and the thesis playing out exactly like what you think. This is the most satisfying part of trading, if you understand what I'm talking about. And I don't think this rally ends here. I think we're just getting started, because if you look at IGV, it's only the third day. It's only the third up day right here. It can go way, way higher. It can go much, much higher. My first target, I think IGV will blow past 88 resistance, and the next resistance maybe 95. I don't even call it a resistance. The next real resistance probably close to 99 to 100. I think this 100 line is pretty much my most conservative target for IGV. I think we at least get to 100, maybe pull back a little bit, and then we go higher. I think it could potentially do a full reversal. just like what it did in QQQ and S&P 500. So massive upside. And also you look at some of the fintech stocks like Robinhood. 3 massive updates, 3 days in a row. These 3 days, it's up like 30% in 3 days. Like right here, 27% in 3 days. That's Robinhood. Gap and Go, and look at the volume today. Huge volume, breakout volume. This is going to continue. I think the next line is pretty much like 100, around 100, 99 to 102 area. And then the next real resistance, I believe, is like close to 120, if not higher. So it can basically double from the low in April in Robinhood. And Coinbase, for Coinbase, very similar story. I think we can blow past 211 resistance, and the next is 232 resistance. And then if we break that, we can go to 282. I'm also looking at a pretty much a big reversal right here. And as for crypto, I still have a lot of crypto. I have a Bitcoin, I have Ethereum, I have Solana, I have Chainlink, I have all these cryptos. I think all these can break much higher. I think Bitcoin could run back to 6 figures. That's my target. I think this is the bottom right here, because as I was expecting Fed to cut interest rate, the crypto is going to run hard. So I'm expecting at least $100,000 on Bitcoin. And Ethereum 3,500. Okay, 3,500 target for Ethereum. Solana, I will have a maybe 147 or 180, 147 to 180 area, because these are more volatile, so I have a wider range of target. And Chainlink from anywhere from 16 to 20 is very possible. I'm very happy with my trades right now, and my account is up massive today. So if you look at my traditional IRA today, it's up over $200,000 if you include the overnight movement. It was up $186,000 intraday and another $23,000 overnight market. Absolutely crazy. You can see all my stock holdings and options of IGV and ServiceNow, and I have a lot of stocks right here. Everything's very green, very green. And Roth IRA up $163,000. Coinbase calls up 26%, IGV calls up 44%, ServiceNow calls up 36%, Oracle call up 19%. That's a pretty massive move. And in the past week, you see I have a very big drawdowns in the past 2 days, because I bought put options and got squeezed out. And when I immediately realized I was wrong, I closed all my put and I flipped to the long side. And I picked all these software companies and I went heavy on the call options. The expiration date on these call options are October 21st. So I have nice 4 months of runway ahead of me. And of course, I'm not going to hold the entire 4 months. but I'll at least hold for like another week or two for these options to run. I think it's going to be extremely profitable, and we're just getting started. And going back to the QQQ charts, back to November 23. So a lot of people saying, oh, I don't want to chase to this rally, but where do you buy if the rally is going to continue like this? You get a gap up and go, and another gap up. You think it's too high. You don't want to chase here, and another gap up. Do you chase here? Okay, another gap up, and another small gap up, and a doji. Do you chase here? You still don't want to chase. Another gap up. Do you want to chase here? Like, you're still not chasing, right? And a small doji. All right, you think it's going to pull back. Okay, yes, you get it, pull back. 1 day pullback. Do you buy it here? 1 day pullback. Do you buy it here? No, you're not buying. Okay, another gap up and go and break out. Do you buy here? You still feel like you're chasing, right? And then another small pullback, a small doji, right? Do you buy here? You still won't be buying. So this is the problem, right? A lot of people say, oh, you don't want to chase because it has run so much. Just because it runs so much doesn't mean it won't go higher. I think we're in one of these rallies, like very rarely seen in years, if not decades. But if you miss these opportunities, these generational opportunities, you miss out a lot. Stocks get double or triple in these kind of rallies. If you miss this, like you miss an entire 100% rally in a stock, how do you justify after the stock rallied 100% and then of course you won't be buying then after a stock up over 100%? Are you chasing? Of course not. Then it goes another 100%. This is how retails miss out. This is how a lot of less experienced trader miss out on rallies like this. These are huge opportunities. Like, if you didn't buy any of these days, and do you buy this gap up right here? It's like a 2% gap up. You probably feel like chasing, right? So when do you buy? Honestly, when do you buy? Where do you buy? Where's the pullback you buy? Do you buy this pullback? It barely tests the previous gap. I don't think you buy this pullback either, right? And then it break out again. So where do you buy? Do you buy this pullback? All right, this pullback is like a maybe 5% pullback, but do you buy here? It barely tests the previous high. This is the problem. Where do you buy? Where do you feel comfortable to buy? Even after pullback, you probably still not buying, and you just keep missing out. For average investors, this is probably why you just average down while it's on the dip instead of chasing. If you're this kind of investor, if you don't want to chase, the only way to invest for you is to average down on these dips. That's all you can do, because any large day up, you won't be buying because you feel like you're chasing. But you have to also look at the relative position, right? Even after this big rally, like 2% up, this is basically the same position where it was on the dip like a few months ago. So relative position also matters a lot. Like, a lot of people think, oh, because we had a 2% update, oh, I can't chase here. Like, that's the absolutely wrong way to think about the stocks. Because once stocks start to gain momentum, it can go nuts. It can go straight up. You should not judge a stock depending on how much it goes up in a day. there's no way to measure a stock by how much it goes up in a day. Is 5% a big rally, or is it 10% a big rally, or is it 15% a big rally? Some of the high beta stock can go 10% very easily, but you very rarely see like these mega cap stocks go like 5% plus in a day. You need to understand the context. You need to understand each stock. Stocks are very, very different. Each stock has its own unique characteristics. You have to be able to understand what situation is playing out right now and understand the relative positions as well. Take IGV for instance. I think IGV right now is still very cheap, very, very cheap, even after a 4% update. This is very, very cheap. 82, like we're talking about over 100 just a few months ago, and 82, it's up 4%, yes. But do you want to miss the next 10% move? Just because it rallied 4% doesn't mean the rally has ended. You want to pick a perfect spot to buy. For a lot of investors, it's very, very difficult for you, because when it was weak, you think it's weak, you don't want to buy the weakness. But when it's strong, you feel like, oh, you're chasing. You don't want to buy either. So when do you buy? You don't buy weak and you don't buy strong. Where do you buy? That's the question. So you have to pick one. Either you buy the weak or you buy the strong. You buy into the weakness and waiting for the bounce, or you buy into strength and hoping for a breakout. You have two options. You have to pick one, right? You can't be, I have to be 100% comfortable. I have to be very, very confident that when I bought this, it has to go up immediately. There's no such thing like that in investment. Uncertainty is the only certainty in investing. No one can guarantee you the stock will go up immediately. But when you understand the thesis, when you understand the dynamics in stocks and the market, you will feel more confident buying the stocks. You know why you are buying these stocks. You know what levels to watch. You know the volumes, the technical indicators, the fundamentals. Everything adds up. These will build up your confidence when you buy stocks. I did a lot of research on ServiceNow. I think this is one of the most misunderstood software company or SaaS company out there. I don't think Anthropic is going to take their business at all. But will there be new companies, new startups using Anthropic's system? Of course. Of course it does. But does it take ServiceNow away? Of course not. Do you know how difficult for enterprise to switch a system that is heavily integrated into ServiceNow? The switching cost, the extra burden, the years and decades of data that need to be migrated, the extra experience required to use the new system, and the debt we lost to abandon the old system. As an enterprise, those are a lot of the cost. There's no way a company will simply abandon ServiceNow for Anthropic just because Anthropic, in theory, can create a similar system like ServiceNow. You still need to throw in a lot of workforce to this new system to maintain the performance, to monitor features and all these functions and compliance and all that. I don't think any company wants to deal with that. If you already have an existing working system in place, this is the ultimate mode for most of the SaaS company because they're so heavily integrated already into company's ecosystem. And this is their mode. And as for ServiceNow, they're actually even more integrated than other SaaS companies because they have multiple systems, multiple layers of systems integrated with the enterprise. So I think this is like a no-brainer for me after I study the fundamentals of ServiceNow. For me, I think ServiceNow can easily go back to like 150 or 160. Basically a double up from the low. The low was at $81. So I think we can go to like 160 to 170 in ServiceNow. We're only right at 94, which is not even close to its fair value. I think the fair value is more close to 160 to 170 in ServiceNow. And also a lot of the other SaaS companies are extremely undervalued. So I just happened to pick ServiceNow because I think their moat is even better than the other SaaS companies. And also Oracle. Oracle is extremely undervalued. I don't even know why people are treating Oracle as a software company. Like their software business is like a small fraction of their current business. They're basically a cloud service company right now, and people are still treating it as a software company, and it's getting killed on the valuation. It's absolutely crazy. I think the fair value on Oracle, I think it bounces back to at least 220, if not more. So that's my conservative target on Oracle. And I think Oracle just had a big deal with Bloom Energy to expand their database service. I think they have a lot of confidence in their database service, the AI Neo Cloud. Otherwise, they wouldn't be expanding their service with Bloom Energy. And that's a very, very simple buy for me, in my opinion. So that's all for today. Please leave your thoughts in the comment section below. If you want to join my Patreon and Discord channel, please find the link in the description below, and I'll see you next time. Bye.
Another Monday, green on the screen, feeling so serene. Leverage the assets, living the dream, a money machine. Blue chip vision, make the right decision with perfect precision. Yo, we own the street, can't accept defeat. This bull run is sweet.